Good morning, and thank you for watching Daily Market Insights. Today we're going to be talking about interest rates, and interest rates is what we've been talking about for a long time, and as of this past week, the Federal Reserve announced that they're going to be raising interest rates most likely in June. And if you remember, Jerome Powell talked about raising interest rates 4 more times by year end. So that means that we're going to start seeing the United States and the economy of the United States start slowing down. Those who are in the housing market are also ultra concerned that in the next year to 2 years that this is also going to slow down in the United States. And if you're watching the news right now, they're talking about stagnation or stagflation in the United States and how the US dollar is fixing to start declining and how interest rates and inflation is going to continue to hurt the economy. Today we're here with Mr. Brunson, and we're going to talk about some of those key factors today and what that means for your money in your retirement accounts and what it means for your money that's sitting in the stock market today. And if you are in the real estate market, how it could affect you in the long term. Mr. Brunson?
Yes, sir. So there's a lot of changes going on right now within the financial system, a lot of big changes. We're in what many people call a pivotal point within our economic cycle, and a lot of people are starting to shift a lot of their money. Problem is that most Americans are too late when they do it. They're more reactive as opposed to being proactive. So we've been reaching out to a lot of our own clients to give them a brief idea or a forecast as to what to expect. That way they can start planning accordingly. When they raise interest rates, it's going to be intense. I think a lot of people are going to take a lot of big hits in certain areas if they're not proactively securing their money in the right areas. We've gone way too long with low interest rates, and it's almost as if the economy is addicted to that low interest rate. So as they start to rise much faster, we're going to start to see a lot of changes and shifts in the financial system, as well as the value of the dollar, as well as the stock market. The time for cheap money is coming to an end. And so we have to prepare for that.
Sure. And let me ask you a question, Mr. Brunson. Yesterday we saw 2 things happen. The Federal Reserve announced that they're going to be raising interest rates. And at the same time, yesterday afternoon, Donald Trump was signing a bill to roll back the Dodd-Frank Act.
That's a big deal.
In my opinion, that tells us that the banks are in trouble financially. And it tells me that they're looking for a cash injection, which they're going to kind of allow the big banks to pull back on not protecting the American people's money accordingly. But it also means that they're going to kind of lower the requirements for home loans.
Right. So the big deal with the Dodd-Frank Act is it was put into place in 2010 to make sure that these banks kept a certain amount of capital on their books in reserve in the event that we see another financial crisis. Well, they did that, and now they're rolling it back, meaning that these banks are basically able to do whatever they want with all that extra liquidity now. And so we haven't even seen a financial crisis yet. And they implemented the Dodd-Frank Act to protect the banks from another crisis. And so if they're going to be raising rates, that's the main reason why they need to have a certain amount of capital on their reserves. So it doesn't make any sense to me.
The other thing that we're also seeing is that we're also now seeing the amount of Treasury bonds being increased, but that's also because they're trying to clear the Federal Reserve's balance sheet, which means the United States itself is trying to get an influx of additional cash inside the United States. And what we're trying to explain here in conjunction, there are multiple things, as Mr. Brunson announced, and we've discussed over the course of several months now, that are taking place. And things are starting to happen at a more quicker or more rapid pace than we've seen in a very long time. When you start seeing them pull back legislation that was already put in place to help protect the American people and to prevent these big banks from putting themselves in a position from collapsing or going under like we saw in 2008 with Lehman Brothers, it is a telltale sign that right now, in my opinion, that they're scrambling for cash. And then when you see the Federal Reserve scrambling to be able to raise interest rates incrementally, they're playing a balancing act here. So this is a big issue that's surrounding the United States. The external portion of the world is looking at the United States, and they're also fearful for the same reasons. And if you look and watch the news outside of the United States, what you're seeing is that these countries are setting up for the United States to fall into financial distress. And you may be able to elaborate on that a little bit, but we know China and India and South Africa.
It's more of a global economy now. So when one economy starts to suffer, all the other ones go along with it. And so it's usually a domino effect type situation when it comes to this. So with that being said, we do have our annual 2018 Gold Global Forecast Report that you can pick up by clicking on the link below. You can also comment in the sections below if you have any questions in regards to what we talked about today. You can also reach out to us here at US Money Reserve if you have questions about diversifying your portfolio or moving money over into this area. This particular report here, this forecast, will show you what the US Money Reserve expects to see in the global gold market as well as the U.S. economy moving forward as we get closer and closer to the next recession. So this will help you really put your financial position in a situation where you can protect quite a bit of your money that's at risk.
Again, thank you for watching Daily Market Insights. Thank you, Mr. Brunson. And again, reiterate, have any questions or comments, click on the link below, send us a message, give us a phone call. We're to help to explain any information or any questions you have. And again, thank you for watching Daily Market Insights.